and 5 US cents, 72 euro cents and 64 pence sterling.
Rod North is the Executive Director of the investor relations company Bourse Communications, and he joins us now. Rod, good morning.
Good morning.
So we've got a bit of a reprieve from the roller coaster.
We certainly have. The roller
week.
coaster's heading on the way up, and it's quite interesting because if you had have bought shares a week ago at 11 a.m. today, you would have seen a 15% increase on your investment. So just shows you how really within a matter of a week how quickly markets can turn around quite significantly.
Such a nerve-wracking time for investors, though.
Well, it has been, and I think a lot of it, when you look back and you sort of analyse it, a fair bit of it happened as a result of fairly significant computer-generated selling, short selling, which sort of really exacerbated that fall. So it's actually rebounded quite significantly, and I suppose in the context of sort of where we are sort of overall, the market's still sort of down about 15% from its peak this year back in April when it got to sort of over 5,000. So it's sort of working its way back, but it certainly created a lot of nervousness, I think, and people, generally sort of looking back and thinking, well, what else can happen sort of in a sort of wider, worldwide sense. And
was the rebound expected, or has it been a pleasant surprise? Does anyone really know what's going on?
Oh, look, I think there's a bit of both in that. I think probably a fairly pleasant surprise to some people, because I think a lot of people have been sort of sitting on their hands thinking, well, what can possibly happen next? I think, when you look at the overall market, we've been getting some mixed results from the reporting season at the moment, and a lot of companies have been putting out profit warnings and so forth. But, essentially, I suppose a lot of people are sort of sitting back, looking at the wider, political sense here, the overall, geopolitical activity that's happening in the US and Europe, and thinking, well, we need to see some more positive signs before we really decide what we're going to do next.
Yeah.
Now, investors are hoping for some positive signs from those RBA minutes when they're released today.
Yes, they are, but I suppose, even in the context of time, that meeting was held on Tuesday, the 2nd of August. A lot has happened, a lot of water's flowed under the bridge since then, but I think there's, obviously some expectation that by having a look at those minutes, there'll be some indication of what, is likely to happen, particularly with the view to where the cash rate will go. But it's been quite interesting just watching what the banks have been doing in the last week, in particular, because we've now had all the banks, major banks, lower their fixed rate mortgages, which is always really interesting because often that's an indication of perhaps what's to come. The actual mortgage rates for variable loans can't alter until the cash rate alters, but a lot of economists, a lot of commentators out there now are sort of forecasting that we're likely to see a rate drop at some stage, whether that's the next meeting or before the end of the year, but that's certainly looking as if it's going to be on the cards now.
It's been foreshadowed several rate drops. Are you in that camp?
Yes, I've been in that camp for some time.
Rod's an early adapter.
I was very much an early adopter of the need for that. I think a lot of it's got to do with getting the calibration of that cash rate right, because we have seen some pretty poor, economic indicators in recent times with business confidence and consumer confidence, and then that unemployment, increase last week. All these things are saying, well, what we really need to do is stimulate the economy, and I think a lot of money is sitting in cash, $500 billion. We need to get people spending money, again, getting out there and getting the economy going. Certainly a decrease in the cash rate will help that.
What about another stimulus package?
Well, if that was possible, but of course there's not a lot of money left back in the kitty, unfortunately, so it's really only the lever of monetary policy that can be used now. Fiscal policy's a bit trickier because, all the surpluses are pretty much gone. So it's really only the Reserve Bank that we can rely on to help to stimulate the economy. And of course they can always put rates down if things improve and inflation, sort of kicks up again, the Reserve Bank can always put the rates back up.
That's right. Come on, RBA, you can do it. Now, people, it appears, are buying new cars again.
Yes, that was a really interesting result because sales for July have increased by 8.6%, which was the biggest increase in 10 years. And I think what it's showing is that, we've started to see cars coming back in from Japan in particular. So they're back to 16% of the total. That's really helped kick that new car sales figure on.
Rod North, thanks for coming in this morning.
Thanks very much.
Now, just a reminder of the two huge stories happening this morning.